And our next big story, a U.S. stock rally fizzled out today after yesterday's meltdown. And in the final 30 minutes, losses started to pile up. The Dow actually ended down more than 200 points. Investors on Wall Street expect another unpredictable day tomorrow. Eyewitness News is bringing you in-depth coverage now. Financial expert Oliver Tutt joins us live in studio to give us a little bit more insight on all of this. Thank you so much for joining us.
Hey, my pleasure, Steve. Thank you.
We talked to you last night after that big day. I mean, at one point we were down 1,000.
Yeah.
Thought we'd rebound today, but now
I'm glad nobody asked me what I thought was going to happen today, because what I thought was going to happen today was things would bounce back a bit, and we certainly didn't see that after about noon. It just kept sliding.
So what do you think is really the cause? Everyone's saying it's China's stock market. They're having all those issues over there, but economic reports out of the U.S. are pretty decent recently. So what's really at play here? You
know what? I think ultimately in a lot of ways the China thing is an excuse for the market to go down. This correction is long overdue. Normally we have a correction every 1.5 to 2 years. It's been over 4 years since we've had one. This is just the nudge that the market needed to send it down a couple of thousand points and sort of wash some of the nervousness out of the system. I mean, you've seen the market bumpy for the past several months now. It hasn't made the big move down, but it's really struggled to make any headway. And that's oftentimes sort of a foretelling of what's to come. And I think this China crisis was just the nudge it needed to send it down.
A correction is what you were calling it.
You know, that's the technical definition for it. Market goes down more than 10%. And generally, that's called a correction. Wouldn't be considered a bear market until it was down about 20%. And most market analysts, and I don't consider myself a market analyst, I'm more of an observer, but most market analysts would say that a correction is healthy for the market because it gives an opportunity for buyers to step in and to bargain hunt and to wash some of the excess out of the system of overprices. So it might not be a bad thing for traders in the end.
I think a lot of people probably checked their 401k yesterday, myself included. Not great numbers there,
right.
But I mean, what should people be doing now with their 401ks? Just kind of wait and see?
You know, my best advice, you know, if you're a trader, I've got no advice for you because ultimately you're playing a pretty risky game and I hope you know what you're doing. But when you're that average investor, 401k, IRA or something like that, the best thing is just sit tight. And you know what? If it makes you nervous, I hate to tell people that are watching the news to turn off the news, but stop paying attention to what's going on in the markets. That 401k, you're not going to need that for another 25, 30 years. What it's worth tomorrow is really not that important, so don't sweat it.
You joked that you were happy that, you know, yesterday we didn't ask you what you thought was going to happen today. I am going to ask you that now. What do you think is going to happen tomorrow?
I don't know which direction it's going to go, but I think it's safe to say that over the next month or two, we're going to see a lot of volatility. People shouldn't be surprised by 200, 300 point swings. One of the realities of the market that we have now that we didn't have back when the market was under 10,000 is that a 200 or 300 point swing in a percentage basis really isn't that much. So if you're not comfortable with that kind of volatility, you really need to reevaluate your portfolio because I think that's here to stay in a lot of ways.
It's a risky game.
Thank
you so much, Oliver, for joining us. Really appreciate
pleasure.
it. And our in-depth coverage continues right now on our website, WPRI.com. You can read more about why stocks are tumbling, plus check out tomorrow's timeline of the Dow's biggest ups and downs.